In our regular global review slot, we're joined this evening on the line by Lukman Otunuga, research analyst at FXTM. Good evening, Lukman.
Good evening. Thank you for having me here today.
It's an absolute pleasure. It's our pleasure. Global stocks are selling off across the world. What's the cause, and are equity bears here to stay for the time being?
Yes, well away to start the final trading quarter of 2019. Stocks across the globe are flashing red. Investors have been shoved with geopolitical risks, disappointing economic data from the largest economy in the world. We saw jobs data, ISM manufacturing data, and the recent non-manufacturing data all pointing to cracks in the US economy. At the same time, if we look at the economic conditions in Europe, the fact that Trump is going to impose 25% tariffs on the European economy and Brexit in the UK, all these core themes are fueling risk aversion. And risk aversion is reducing appetite for risky assets such as global equities.
Yeah, and I mean, yesterday we had, as you mentioned, we had Trump applying these tariffs onto the EU. He's been threatening to do it for a while, but now it looks like it's coming to reality. And, so many people have said for so long that, no, not to worry, the US economy can withstand it. But, my impression, and this is what I'd like to get your opinion on, my impression is that whilst the US consumer is still holding up when it comes to manufacturing and other sectors in the economy in the US, not looking good at all.
Yeah, this couldn't have come at a worst possible time, especially for the US economy, consumers, and Europe in general. And the economic data we've seen from the United States this week just continues to highlight how Trump's trade war is going to continue hitting US consumers. For example, if you look at today, the non-manufacturing result was below expectations, I believe around 52.6, 52.7. So what it's suggesting is that it's going to start to seep into consumption, and we know how consumption is the major driver of growth in the United States. So
right.
This is a key thing I'm looking at. At the same time, in Europe as well, all you have to look at is Germany. The largest economy in Europe is basically on its knees. This is the last thing that the German economy needs.
Yeah, and I think, Trump has had more than adequate warning from the likes of Jay Powell, when they've had the chats on the FOMC. But he just seems to ignore them completely. And I think he's utterly obsessed with China and trade wars and the like. But turning to Brexit, it looks like Boris Johnson may have cobbled together some sort of deal. Do you think it's going to work?
The Brexit drama has been going on for over 3 years, and we always see a development where it looks like something is going to come through, and at the last moment everything falls apart. So, yeah, Boris Johnson has presented his ultimatum to Brussels, which revolves around the widely spoken topic around the Irish border. Now, the response we've seen so far from Europe has been quite mild, but it'll be interesting to see how things play out. If we do have a case that the deal is moved forward, this could be very good for the British pound, which remains one of the sick men of the G10 space. But as history normally tends to repeat itself, I don't think that anything's going to come out of this. And this is just going to be more uncertainty for the UK economy and a drop in appetite for the pound.
Yeah, because, there are a couple of things here. First of all, he's got to get it past the Parliament. And, if you look at the numbers there, it looks like he's going to be getting some of those rebels back on side in the ERG, the European Research Group. But at the same time, it looks like Labour on the opposition side seem to be resolutely against it. I saw Jeremy Corbyn earlier referring to this as being a kind of rehashed version of what Theresa May put to Parliament. So he's got to get it past there before he even gets it into the hands of the Europeans. So I tend to concur with you. I think it's going to be a tough one. And as far as his bluff and bluster is concerned, is there a possibility, do you think, that if this isn't accepted, that they really will crash out at the end of this month?
One thing to keep in mind in this is that we have to understand that a bill has been moved forward that if no deal is achieved, that Boris Johnson legally has to request for an extension for Brexit, extension of Article 50 all the way to January 2020. And with this being the case, I think he is going to get the extension, because you just have to look at the European economy and the United Kingdom. Both sides are really not in a position to weather the storms of a no-deal Brexit.
Okay, going back to the States now, outlook on the dollar. What can we expect from the pending US jobs report? That's coming out tomorrow, if I'm not mistaken.
Yes. So we just need to look at the pattern this week. And as I said earlier, economic data from the United States hasn't been anything to celebrate about. Markets are projecting NFP to have around 140K. Anything below this should fuel fears of cracks in the largest economy in the world and strengthen the case of lower interest rates, which is negative for the US dollar.
So, with all of this uncertainty, all this chaos circling around our heads, where can investors find some sort of shelter?
There's no place like gold. You just need to look at gold's valuation this week to understand how, when we have market uncertainty, concerns of a slowing global growth, Brexit drama in the United Kingdom, political risk in the United States, lower interest rates across the globe, gold will remain the prime destination of safety, and we can see it in its current valuation. It started this week. It started the quarter on the back foot. This was back in Monday, but it's now pushing back towards 1,011. And if NFP tomorrow is disappointing, don't be surprised if gold ends the week around 1520, 1525.
Okay, as John Maynard Keynes famously put it years and years ago, decades ago, it's a barbarous relic, but never mind, it has its day. And then to wrap up, really for the benefit of our local listeners here, the Rand, your outlook on the Rand?
Yeah, so the Rand has actually performed quite well today. I was looking, it's appreciated against every single G10 currency, despite risk aversion being the name of the game. I'm still trying to get to the bottom of this to understand why the Rand is appreciating despite the unfavorable macroeconomic environment. But then when we zoom out and we look at the Rand's performance this week, it's actually depreciated against the most major currencies. And when we zoom out even further and look at the Rand's performance over the past 3 months, it's weakened 8% against the dollar. And this highlights how the South African Rand is highly sensitive to global sentiment and general risk appetite. So with everything we've discussed today, the fact that risk aversion remains the name of the game, this should weaken the South African Rand and other emerging market currencies moving forward.
Absolutely, yeah. No hiding place, unfortunately. Lukman Otunuga, research analyst at FXTM, many thanks for your valuable input. Thank you.
Thank you very much.